Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we wrapped up the trading week on Friday, we had a fairly quiet trade throughout grains and livestock. A little bit of profit taking, it appeared, especially in soybeans. But overall, fairly quiet way to wrap up the trade. And we definitely have plenty of things we're keeping an eye on and watching, and plenty to discuss here on the show today. Joining us, a new voice here on Market Talk. Jeff Hoogendoorn with Professional Ag Marketing is with us. Jeff, great to have you on the show, sir. I hope you're doing well. Thanks for joining us today.
Yeah, thanks for having me. Looking forward to good discussion and see what kind of ideas we can come up here in the tail end of the week.
Yeah, as we wrap up the week on Friday, Jeff, as I kind of alluded to, fairly quiet. I know corn, wheat, relatively firm heading to the weekend. Soybeans, maybe a little more profit taking there. It just felt like kind of some consolidation type of trade ahead of the weekend here with weather headlines we're watching out of South America. Maybe a little worry from Chinese buyers this past week about the delay to the Brazil harvest and obviously the crop concerns in Argentina. I know we've had other headlines in the market. We've had economic data, plenty of stuff, but overall just felt like a fairly quiet consolidation, slight profit-taking type of day on Friday across grains and oilseeds. Would you agree with that? What did you see?
Yeah, that's what I kind of chalked it up to for the most part was, some profit-taking, like them soybeans. We didn't have a lot of updates this week, obviously, but a pretty big update yesterday, so it's pretty easy to fall back down again here today. And you go over into the corn and the wheat, and one thing that's kind of been halfway impressing me is that winter wheat. I know temperatures wise, boy, we are looking for an ugly one going into next week. So that thing's been building a little bit of courage. So that Kansas City and the winter wheat's been kind of impressive, maybe helping this corn market out a little bit too. And, I don't want to just ramble on and on here, but one of the things I think you look at that I've been thinking a lot about in the past week or two is the price action after that last WASDE report. To me, you really couldn't have gotten a lot more bullish than that. And bring up that chart once and take a peek. We really couldn't do anything very special coming out of there. I would have thought we would have been able to push back towards that $6.95, $7 area. On the March, for an example here, and it's kind of been a struggle bus there, and it's so I think that's really interesting. There's some things to learn. Just price action after a big report,
Well, and to stay on the corn market there, I think that's a great point you bring up. We got out of that report. We couldn't really be any more bullish, as you alluded to. And I, look at old crop corn, that 680 range here, wrapping up the week. New crop, we're somewhere 580 to 6, give or take. It just feels like we've been saying that price for quite some time now, give or take a few cents here or there, but we just can't seem to bust out of that kind of sideways choppy range here in this corn market, whether we're talking old or new crop, Jeff.
Yeah, no, that's a fair point. And it kind of brings us over to the next discussion, or maybe we're jumping way ahead of ourselves, as far as what do we do with these markets right now. And I know there's some folks out there that are thinking about grabbing some new crop coverage. I know there's some advisors out there thinking about grabbing some new crop coverage on some corn, and I'm really struggling to get my head around that, to be quite honest with you. I think some of it's going to depend where you start from. If you've got some work done, last summer, maybe early fall type of stuff, there are some opportunities to be in that, 6.25 or something, 650 maybe type of range. And I'm struggling to chase this market now. I get it. Everybody's looking at the demand situation on the exports, and ethanol's nothing to really write home about either. But I just think you're so close to the spring season here. Even though we can't seem to really get anything too special, we can't seem to bust out of this top side, which is narrower than what I would have anticipated here 2 weeks ago, even like you're alluding to. I just think you're close enough to the growing season where I think you got to kind of take a chance on that in my mind. And I guess I'm not, in my opinion, the news kind of shifts, right? I like to think of it as, and right now we're all exports and demand, and I just think soon, South America weather, got to throw that in there, of course, but I got to believe soon we'll be able to talk about is acres and then yield, and that usually gets to be a lot more volatile, which most of the time, 8 times out of 10, that's going to drive better opportunities.
Very true. Well, and to your point on acres, I think that's great you brought that up. Yes, I know you guys are right in the heart of the Corn Belt there, northern Iowa, southern Minnesota area. Obviously, thinking about what those spring acres are going to look like here, we start to hear some private estimate surveys. Maybe there's going to be a few more wheat acres in some parts of the country. Looking at fertilizer prices, what are we going to see? Corn, beans, kind of hovering about equal-ish when it comes to acreage for the spring. I think the next 30 to 60 days, Jeff, and I mean, you could agree or argue with me on this point, but it's going to be very critical as we start to really nail down some final decisions for spring planting here across the Corn Belt, Jeff.
Yeah, absolutely. That's going to be a discussion. We've seen some estimates come out. We're talking, 90 to 91 million acres on corn. I've kind of been seeing some of that. Both sides of there, and plus add a little bit beans and the wheat like you're talking. I think that's all doable. Higher prices usually drive some better production. Obviously we're going to be looking at doing some double crop acres on winter wheat and going on to beans, of course. So I think that all works. Fertilizer prices have really been dropping out of bed here, but what we're experiencing, there's not as many folks that can capture that as what you would think. And I know we're talking, there's 2 points here I want to make. One is dropping fertilizer. It's not like the next day everybody's cost is dropping, right? We've all already made decisions and made some beds that we're going to have to lie in from a fertilizer standpoint. And then on the retail front, those folks have some positions also that they're kind of reluctant to give up. So there will be some producers that are able to take care of and take advantage of some of the cheaper fertilizer. A lot of it's already made. Now, we're talking about the marginal acres. We're talking about the 2%, right? So, yes, I think it's still going to have an impact. It's just not a 1-for-1 ratio type of thing, if that makes any sort of sense as far as that acre discussion. So I personally don't have a lot of argument with the acres that people are talking about. We keep coming back to big picture stuff here, and a few of the things that we're thinking about is, all right, what's the right corn demand? Last year you were 2.4 and some change on exports. I think you're 2.7. Don't quote me on these guys. You probably got a whole host of fact checkers in the background there, but I think the year before we were 2.7 when China was buying some stuff, and buying quite a bit of stuff. And this year, of course, 1.9. In my mind, that's got to bounce back some, but it's not. It's gonna. We got a few things working against us. One, it's showing through history. It takes a little bit of time to buy back into some of these markets. We have a short supply. We have high prices. It's not just going to come back on day one. So I'm not a huge export fan right now, but I think, as you think about acres for next year and you think about what's the baseline demand, how many acres do we need? I think you dial in something higher than this year's demand, but less than maybe what we've seen the past couple of years.
Jeff Hoogendoorn with Professional Ag Marketing is our guest analyst here today on the show. Jeff, let's shift our focus to livestock. I know you are a livestock guy, and cattle and hog markets both been interesting to watch. Wrapping up the week Friday, that cattle market was relatively firm. I know it's been a tough road this past week to get cash cattle trade happening. And I know a lot of folks are in the trade are still very bullish this cattle market. So I think just to start, your thoughts there. What is your outlook picture in this cattle market here as we're getting close to wrapping up the month of January? Are you in the bull camp? Or are you in the bear camp? Where are you sitting right now?
Yeah, and where do we start? There's a lot of things going on in that world right now, and one thing you either love or hate, or and actually probably you love and hate, just depends on what day it is about the cattle industry, is it's so dynamic and so flexible. And the people that have been listening to me the last couple of years, they hear me use that excuse over and over, because yeah, we have been waiting for smaller numbers to come down the pipeline here, and we've been waiting for them for over a year for sure, probably a year and a half, and there's continued events that continue to take place, that push those shorter numbers right beyond our grasp, right? And
Mhm.
I think we're seeing another one now. I'm getting very concerned about this current weather that we're in. So, and another very interesting thing, most weather markets, it would be a couple weeks of a very willing seller from a feedlot standpoint, right? As he tries to get rid of these big cattle that he's sick of looking at. And then after that, pretty explosive. As you get into smaller cattle, cattle aren't growing, cattle aren't quite ready yet. But today's feed costs make this situation quite a bit different. And we're gotten ourselves into another round of willing sellers here in the short term. And I don't know how deep that is. I'm concerned that it's a little deeper than what I was hoping a week or two ago. Now, all of this stuff just continues to make our big picture supply situation more bullish,
Mhm.
right? So someday, yeah, we're going to have a very exciting market, and it's going to be a lot of fun to be a cattle feeder. Um, I would say most cattle feeders would not agree with that right now. It's been a tough sledding, but it's yeah, long term. I like the supply situation for sure.
Well, and you mentioned feed costs in there as well, and I have to imagine, and we see some of that ebb and flow if it's a quiet news day, if corn goes higher or even wheat goes higher. I know some wheat's been making it into the feed bunks. Cattle might move lower if there's nothing else to really trade on, and looking at some of those margins. To your point, I know it's tough out there right now with you got $6-7 corn. Sometimes that doesn't pencil out the way you want it to pencil out, Jeff.
Yeah, absolutely, absolutely. But another report that's going to be really interesting is the total inventory cow and
Mhm.
calf calves report next Tuesday. Um, Man, I've seen some pretty interesting estimates coming out on that. 4.5% less cows again this year versus last. Boy, a year ago, if you'd have told me that, I would have said, no way. But here again, you've got weather, you've got feed cost. And the other thing that we haven't talked about that's a big deal in the cattle world is interest cost. You got $2,000 wrapped up in whatever critter you've got around, whether it's a mama cow or a fat steer. That's real money on a cost of production or cost per head per year. The proof is there. We have continued to kill an elevated allotment of cows all season long here, all through 2022. So I'm absolutely thinking we're 2.5% lower on the cow herd.
Mhm.
If we come in at 4%, I wouldn't be surprised. But that puts us right back on our lowest levels ever for a cow herd. So that's back to 2014. And that was a very fiery market when you finally got those calves through the system and the lower supplies were realized.
Very, very true. Well, and another thought, I will throw this at you as well to help us maybe segue and talk a little bit about the hog market too. I've talked to some folks, and I've thrown out this idea. We see that spread between cattle and hogs getting pretty wide, and this hog market been struggling, trying to find a bottom. I wonder how much has the hog market in itself been an anchor on this cattle market overall? Jeff, what do you think about that?
Well, I think I don't know if the if the hog market's been an anchor on the cattle or not. I mean, we continue to wait for that to take place. It's so I'm sure it's affecting it in the background for sure. But it's amazing how well they've been able to divorce themselves. I mean, if you were trading that spread, which fortunately I'm not brave enough to do that, but there's no way you would get it to these levels, right? You'd have been short that thing a long time ago. So that's been incredibly interesting all by itself. Another thing that between the two that we've been watching is retail prices, and I think that could very possibly be the next story here, as those two impact the hog versus the cattle. So, you talk about that spread being so wide today, we might be seeing its widest point. And the reason why it might not be on the supply side of the thing, it might be on the retail prices. So what we're starting to see is beef prices are coming down off crazy high levels, right? One thing we learned in the past 3 years is when people stay home, they eat beef. That's the first thing they go buy. And so even like last summer, we saw some extremely high beef prices. And I think that started dragging up the hog retail prices. Now, as we've tipped over the beef prices, we've continued to increase pork retail prices. So now you're starting to look at a very different relationship at the retail shelf, and a very different relationship in the margin between the cutout reports that we see and what the consumer's getting charged for stuff. I mean, that retail margin on pork is just astronomical. So I think I can't help but believe you're gonna see featuring come through on the pork side. They like to do that in January, February anyhow. I think you're gonna maybe see some price drops starting to take place from a bigger picture. I think that's going to be a little bit of tough go for the cattle market here in a time of year where it kind of struggles anyhow. And I'm talking box beef now, not the supply side, right? Those two different stories. So I think the hogs are gonna probably put up a fight here against the cattle from a product value standpoint.
A lot of great thoughts there, a lot of things to consider. And, Jeff, as we're getting close to wrapping things up here today on the show, I'll kind of turn it back to you and open up the floor. And we've covered a lot, but any risk management thoughts, anything that you want to make sure you really reiterate to folks listening in, I'll let you choose whether it's on the grain or the livestock side, but just any thoughts in general, some risk management things that people need to be thinking about right now?
Well, my advice is, I think all of these markets are in a fairly optimistic position. So you look at the big picture balance sheets. You look at on the grain and on the soybeans, or on the corn and the soybeans I'm talking about. You look at the supply situation. We know we've got some potential demand issues like we already kind of, faded to here in this discussion, on the cattle side, but you can't ignore that supply side. On the hogs, we still believe there's a couple percent less hogs out there. That's not showing up today, quite the opposite. But, from a big picture standpoint, I think all of these four major commodities are still in a pretty optimistic position as far as their cycles go, big picture cycles. So for me, what that says, you don't have to be chasing lower markets. You can pick your targets. They can be targets that make really good sense for your business. Make sure you've got some margin in this stuff. Pick your targets and be disciplined. The seasonals are still true, especially on the grains. So get your plan together. Don't get tied up in, well, shoot, this cattle market's just a dog. We can't get any legs underneath us. I better get some hedges on just because I have to. I don't think we're in that situation in any of the markets. I think you can be more optimistic than that.
Great stuff to wrap up on. Jeff, I know if folks have questions, need some marketing advice, they can reach out to you and the team there at Professional Ag Marketing. I'm sure a phone call, online. What's the best ways to get in touch with you guys?
Yep, that'd be the two best place anytime, of course, professionalagmarketing.com on the line. You got phone number over here in the Laverne, Minnesota office, 507-449-2030.
Fantastic. And again, the website, professionalagmarketing.com. Jeff Hoogendoorn with Professional Ag Marketing. A pleasure to have you on the show, sir. We'll have to get you back on again soon. Thanks so much for joining us.
Thanks for having me. You bet.
And that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.